All right. Hey guys, happy Sunday. I hope you guys had an awesome weekend, and I hope everything is going great for everyone. Um, I don't know if I can hear anybody because I know everybody's mic is muted. So I don't know if you guys can hear me, but if you can hear me, please drop a comment in the chat box so that makes it much easier. Or you can unmute yourself for a few moments. I can just know that I can hear you guys in the background. Either or
Hear
is
you.
okay. Beautiful. I can hear you, Mr. B. Thank you very much for that one. I can hear you. Beautiful. Okay. All right, let's proceed. Let's move on. All right. All right, go. So okay, beautiful. Thank you very much. See some. Um, right. Last week we had the analysis with gold and to continue trading USD CAD. And so far so good. Everything is okay. Everything seems to be going according to plan. And I would just like to keep focusing on what we're doing because, as I said 2 weeks ago, I like to trade and change the strategy to a more focus approach in which we pick an asset that is meant to have a massive move. Maybe in like a space of a month. The move is meant to last for a month or maybe 2 weeks, and we just focus on just that asset alone, so that way we don't get to miss the opportunity when it presents itself. And if it so happens that that opportunity does not present itself, we tend to learn from what happened and then make sound, more informed decisions in the long run. So I'm gonna open two seasonalities, which is I'm gonna open the gold and I'm gonna open the USD. Let's go check gold. Let's check the USD. And I'm sure quite a few people jumped in on the gold move, and some people jumped in on the USD move, or USD CAD move. Whichever one you jumped into, uh, both of them seems to be profitable at the moment. And the gold move is just at the start of it. And the USD CAD, oh well, we're progressing a little bit into the move right now. It's still at the kind of like the beginning, but it's no longer like the beginning as it was before. So we're going to progress in time. This hasn't loaded yet. All right. It's gonna progress over time. Just trying to get the USD CAD. So let's start off with USD CAD, right? So with USD CAD move, right? We were meant to sell this asset. We knew the USD is gonna come down, and I think this was the very early time when we're in the market. We started earlier right here. Some people got in right here, people panic, some people jump off the boat, and I can understand, an asset pulling up about 190 pips is no joke, uh, you know to you. And eventually some people were able to get in on this day. And I don't know if a lot of you got out, but I know some people are still holding, because I'm still holding at the moment. Now, what we can see in the USD CAD, according to the move, so the move started, it should started right on time, but I was just being early in regards to the move. So let's go. It started on the 19th. So the 19th right here, we see the alignment with the 5 years, 15 years, and the 33 years, right? And that move was meant to go to 21, and then we're going to have a pullback onto the 24th. Right, let's see what happened so far. So I haven't really checked this. So on the 19th, it actually peaked. That's where it got to peak. And then 21, we had that pullback. And then 24th, I think it should start going back down. Let me just revalidate. 24th, yeah, beautiful. So on the 24th is meant to start going back down. And on that 24th was actually a Saturday. So what happened was it hit the 200 EMA, you know, and then price ultimately start going back down. So now on the 30th, we had that pullback. Let's see if there's any space for that pullback in the seasonality. So we had that pullback on the 30th, and then we're probably going to have a little bit of consolidation this week coming, and then a final bottoming out to the third. So the first exit, because I remember, I think it was 2 weeks ago, I told people, quite a few people, I can't remember how many people I told this, but I said it. I think I said on the webinar as well. Like, you can either get out at this point, 28, or you can get out at this point right here, around the second. Yeah, around the second, or ultimately you want to get out right here, right? So whichever one you choose, you should be, you know, you should have your specific reason for choosing that specific entry. If it's like, oh, you know what, I've had enough of the trade, I don't want to take more profit, I feel the trade is going to turn back and start going back up, whichever reason you choose, any of the reasons you choose, everything is correct. So I personally will still hold for a little while longer. You shouldn't do that, to be quite frank, if you've had enough. So if you've had like 300 pips on this trade already, let's say 320 pips, you can either choose to exit, or you can hold to maybe when price gets here. So right around here, for example, we might most likely see price pull back. But I want to wait till price gets here. This is where my ultimate take profit will be. But I wouldn't recommend, uh, staking all your entire positions. I might just have to mute for a little bit. I would recommend staking all your entire positions on just this point. If you can take some profit off the table, take some profit off the table, wait till price gets here, take some profit off the table, and then you can take your last profit off the table around here before we might actually see the USD start pumping back up. But the move is still early, and so far USD keep going down, gold should also keep going up. So that seems to explain it with the USD CAD. Now, in terms of entry, let's say you didn't get to enter this trade and you want to enter this trade right now, the way it's looking, it might still be possible, but I wouldn't really advise risking it. The main reason is the move has gone far off from where our entry is meant to be. My initial entry I targeted was maybe somewhere around here. I can't remember exactly, but the move started somewhere around here. So sorry guys, I might have to mute everybody again. Uh, Someone's mic is poking up. All right, apologies. So I wouldn't really advise going into the market because we do not have alignment as of now, because on the first, which is today, there isn't that much alignment, and we have that consolidation coming through. Now keep in mind the market might actually consolidate a little bit and then fall out, but because the move is far gone, I can't really point out where it's going to fall, except from maybe on the 18th of this month. So from now to the 18th, that's why I'm saying if you want to exit the position, you can exit where it is right now. If you're holding from the top right here, if you want to exit at this point, you can exit right there once price gets to that region, just to preserve some of your capital and have some profit on your table. And the 18th move is still going to happen sometime in the future. So we still have, like, if I'm not mistaken, 2 weeks plus. We have this week coming, and then the week after that, and then the week after that will be the 18th to sell further. So you can easily choose to exit this trade at this point, or you can wait till price gets into this zone and exit the trade. Whichever you choose, it's fine. So that sums it up for USD CAD. So there really isn't that much, to capitalize on that. Now let's go into gold, right? So gold, we expect the gold to start going up. Let me just delete this. Let me leave the ATR because of the stop loss stuff I was talking about. All right, so with the gold move, we're expecting gold to start going up. I mean, we are anticipating gold to start moving, and because of the consolidation region around here, it made things a little bit difficult. But as time, as we went over time, what we saw is gold actually moved about 289 pips up, and then on Friday taking some of that back to raid the guys that went in on these day, and then gold is most likely going to start going back to the up move. But before I even speculate that, or before I even say that with full confidence, let's go back to the COT report for a second. Now let me not check the world. Let's check the gold COT report. So now, from what we can see on the COT report, we can see the guys, the commercials have taken out a position from the short side, and they've also taken out positions from the long side. And the non-commercials are doing exactly the same. They're taking more position out of from their short side and their long side. Now, this doesn't really tell us much, but what we can ultimately do is check what the chart is saying. I'd like to just focus on just the commercials only. Now, what we can see is it's flat. Gold is flat for 2 weeks straight. Now, remember last week I was saying, see this up move that gold had right here, and it looks like it went up just for 2 weeks. right here in terms of the price. What we expecting to see is gold should still keep going up. We should ideally see maybe this week a bump to the upside on the COT report for gold, which then revalidates that our move is going to happen. So right now we're still dancing on a string, but gold is it's progressing the way it's meant to progress. So we just need a little bit of buying power in there from the commercial guys to also indicate that, you know what, gold is going to go our way. So that's what we're expecting. So something like this, for example, when we had this move, which go went up, and then this for reassurance went up, and then we had that down move, then gold start going down. Then we had the up move right now. It looks like it's going up, but we still need a little bit more bump to the upside, to be able to secure our spot. Now, the COT report isn't helping us this week. This week didn't give us any help. Now we're already on the boat. There's no assurance on this boat right now saying gold is going to keep going up because we can't see what the commercials are doing. But we have the seasonality to help us out with that, to give us an idea of what's most likely going to happen. Now, I don't personally trade just on seasonality, input alone. I like to get the current information, which is the COT. COT gives that current flow of weekly information, so to bite out all the noise. But right now, it would have to suffice by itself. Seasonality will have to suffice by itself to help us decide what's most likely going to happen. So what we're looking at right now is okay, we're right here right now, and what we can see is this, right? From the 5 years, we expect a fall till the fifth, and the 15 years also shows a fall, and the 40 years also show the fall to the fifth, in which from the fifth we can then start buying. So it's showing a fall till about Thursday, and then from Thursday should be the last time, and then you should be able to get in. Now, what we can bank on is sometime this week, probably on Tuesday, the new COT report will most likely come out. I think it should most likely come out 27. Right. Yeah, on Tuesday. So on the 3rd, COT report should come out, and ideally, if we see a long, and that more commercials are going long on gold, then that actually helps us secure the idea that on the 5th, gold is actually most likely going to go long. So now, yeah, FB, yeah, non-farm pair. Okay, yeah, we'll get to that in a second. So that secures. Thank you for that, by the way. Think you said that. Yeah, Mr. Biona, thank you for that. So that helps secures the long move. So if we see that buy input coming in, we can then say, okay, you know what, right? Gold is most likely going to go up on the 5th, right? So for the guys that didn't jump on the boat, remember I said in the chat room, you have to be very careful. You have to wait now. So you have to wait till gold pulls back to a sufficient amount and then go in on the 5th. Now, for the guys already in, I really doubt gold is going to come below, below the 50, 20, and the 200 EMA. Most likely, gold is going to play around this region. It's most likely going to consolidate. So what I would ideally expect is gold should consolidate within this region, right? Gold should consolidate within this region. And it kind of done already like a double top right here. You can see that double top, then it falls back. If you go on the 4 hours, you can see much better. So it's done that, and then it's pulled back. But what you can see is when price got to 250 EMA, price got kicked back. So ideally, maybe price will even pierce it down to around this level, just to rate out some of the guys that went in very early, people like me. But it's more about confidence now. Everything is about a confidence game. We do not have the COT report backing us at the moment until Tuesday. We're gonna figure out what's going to happen, but what we can capitalize on is that we know that it seems like this move is about to happen because we can see that pump that we got right here. And also, when we look at the previous COT data, this move is still about to be fully fulfilled. It had a very massive push up, but we only had like 2 weeks in which price went up. So it just went up a tiny bit. So we still need more of that momentum in there. So most of the commercials, maybe the pending orders haven't been kicked in yet. Maybe they're still trying to raid some people out to create more liquidity to go up. I don't specifically know what's happening, but right now, what we can bang on is that we're on the right direction and the right track. So ideally, what we're going to see is gold moving back up. But before then, gold might consolidate between this region. So between the double top region and here, gold just bounce a little back and forth, trying to get people confused, to say, okay, you know what, gold is going down. Get a lot of people that are analyzing gold saying, you know what, gold is going down. What gold is doing right now is just a pullback, all of that stuff, all of that good stuff that they say. We need to get money from someone, right? And those guys will be the ones supplying us with the cash that we need. So we want to see that ideal bounce and then gold moving back up. I do not want to really see gold just running up, because that creates kind of like it creates a kind of gap in which this wouldn't happen. This move from the first right here wouldn't happen, but gold is funny like that. Gold tends to just run off like that. So if that don't happen, that'll be very difficult for the guys that want to jump in to jump in. So if you've missed the strain, you've literally missed the strain, and you just have to start looking for a way to jump on board with it. So I wouldn't really want to see that coming up this week. So I know a lot of you want to know about when should I go in, when should I go in, when should I go in. Now, I don't want you guys risking your capital without, getting the return for your capital that you're risking. So I would say on the 5th, you should put it down on your calendar. Should be a date that you should consider going in only if the COT report gives us a buying power. If there's more long than short, right? If the long isn't there, then you should probably just observe. If you're very new to the game, just observe. There won't be any harm in you observe it and being right. But there will be a harm in you going in and then the market tend to be wrong, start coming back down. So far we're still good on the buy. There isn't any major concerns about the buy. Now, to secure the spot, just in case, let me just put this out, just in case what's it called, just in case gold actually gives us that buying power and we want to confirm the 5th as the day to go in. Let's check what the probability would say or would show us right here, because that would help us determine when our exact entry would be. So now, looking at the August probability tool, what we can see is tomorrow gives us a 57% chance of a buy. Then we got to sell, then we got to buy, then we got to sell. I don't like trading sells buy because it doesn't really give me a full a full idea of what's about to happen. But what we can see from the probabilities also confirming a consolidation might occur. So over the years, this is what has happened. So that consolidation move has happened over the years. So what that confirms is most likely price is actually going to consolidate. So if that happens, you want to stay out of that consolidation as much as possible. But if you're very itchy and you want to buy, which I do not recommend that anyway, make sure you buy from the bottom of the consolidation. So somewhere below, maybe slightly below the EMAs on the daily will be an ideal point to go into it. But I wouldn't recommend it at any point right now. I just want to look at that. And also, when you look at it on the weekly, you can see price is actually trapped between the 50 and the 20 EMA. You can see price has been trapped there for 4 weeks, which has been a month. Literally, price has been trapped there for a month, and price is literally breaking away from that point. You can see the head of the market literally poked out of that EMA. So that might give it a small support, swooping it back up to the top side, and then having a new point to go to, which price might either come between here or here. So from where price is right now, we still have at least 581 pips to go, or 1,000 pips plus to go. So for now, I would say, be safe. Observe if you can. If you can't, go in at the lowest point of the consolidation. I would even say going at around here, 1801. If you can, be patient. So if not, just stay away if you don't understand what I'm talking about. Just observe. So, but what we can see now is next week, though, from the 9th, price seems to look as if it's going to go up throughout the entire week. So we have this 57, 64, 64, 71, 57. So we have that 5 days for that smooth run. So in which case, if we see a buying power in the COT report, then what we have to look for next week is when our buy position is going to be. So, you know, right here on the 9th, if I'm not mistaken, should be the start of next week, right? We can actually get a tiny position right here. You know, I wouldn't really recommend it, but if price have literally moved, or if price has moved and started going up, 9th might be a very skeptical one to go in, but you have to set a very extreme tight stop loss. If not, ideally, then on the 15th will be the next date to jump into this. So we have between now, which is on the 5th, to go in, or on the 9th. Now the 5th, it doesn't really look good because of, if you look at the probability only gives us a 43% chance of a buy. I really want a position that's going to be stacked up, but on the 6th gives us a 50-50. So on the 6th might be a day to go in, but I do not recommend going on the 6th. If you can, you wait to the 9th, but if you really want to get that early entry, you can go on the 5th. But if you go on the 5th, one recommendation is the ATR. I'm just going to point out the ATR. Let me check someone before I point out the ATR. Well, head and shoulders. To be quite frank, I ain't really good with seeing all of those stuff. Well, you see on head and shoulders. I'm not seeing what you're seeing yet. Well, I'm trying to see. Someone said they see on the head and shoulders. So, oh, you're looking at it from where? Like this? Let me take all of this out. Just gonna delete all of this for a second. Someone might see something I'm not seeing, so I don't really do all of that. You go down on trading view. Okay, let's go check trading.
Yes, I think there's head and shoulders there.
Okay, let's go see what trading view is saying. All right. Oh, you're looking at this. Okay, yeah. So literally, you're confirming that it's gonna go up. This is a very tight one. Right. Yeah, you're correct. I mean, I tend not to use this as a base of the trading, but every leader helps right now, just like Tesco's. You know, if that also confirms it, then that confirms it. You know, but personally, I just like to confirm. I would mostly want to confirm with the COT report. This is what's going to literally confirm it for me. Once this confirms and that long position goes in, and in addition the head and shoulders does help, you know, then you can also look for you know, maybe a trend line if you can, to find an entry on that specific date. But be careful. As I said, the 5th look more like a down move, even though the seasonality is showing that on that 5th, no, is that on that 5th might be the lowest point. So what we can see on the 5th is price setting a wick to the downside. Let me go back to daily. So price setting a wick wherever price is at that point, setting a wick looking like it's coming down, and then the price candle close above. Then the 6th price start taking off, because we have a 50-50 on that day. I don't normally recommend going on a 50-50, but it's now a tight one. If you can see, like, everything literally is now looking very tight. So what I recommend is, if you can, guys, keep your eyes fixated on gold. If you can, you don't need to trade multiple assets to make money. That's the truth about trading. Trading is taking money from the people that are patient, taking money from people that are not patient to the people that are patient. Warren Buffett said it the best. So you want to be very, very patient. If it's that one asset you're looking at, trying to get it, and trying to snipe that asset, you know, to the best of your ability, then focus on just that one asset and just get that asset. If you're focused on so many assets at the same time, what could happen over time is you would then lose focus based on maybe one asset doing something that it's not meant to do, and maybe rating your position, for example, and then you're like, oh man, you feel that emotion and you use that emotion to trade gold. Trust me, if you use that type of emotion to trade gold, gold will punish your account. That's what it is. It would literally take the money off your account. So you have to be very, very careful. I would highly recommend you just wait. My target spot would be gold coming somewhere around this region, but the maximum that I expect gold to get to, if anything, is here. But that might not even happen because gold might just consolidate between this region right here. So gold might just literally sit around here and consolidate, or could be very, very heartless and they just start going up. If you start going up, then I wouldn't recommend catching a moving trade. That's just me. I would not recommend catching because I've done that in the past and it literally beat me. But what you can do though is you can catch it on a pullback. So people that trade pullbacks. So when price pulls back, like when price broke away from this region, pull back here, for example, you get your entry. When price breaks away from this region, let me give you a good example right here. So let's say price breaks away, end up breaking away from around here. So what happened is this. Just gonna draw this out for you guys just to make it a little bit more, friendly. So if price breaks away, let's say price end up breaking away from this region, what price will most likely will do is this. Price will come back to that region and broke away from, and that's when you get your entry right here, you know, before price moves up. So you want to get your entry around here. That's where you want to get your entry when price goes. So if anything happens and price looks like it's running away from you, it's running all the way to the top. Don't rush. Leave your computer. Go play. Go do whatever you need to do. Come back to it and check. Or set an alarm on your MT4 around that region. Mukhtar actually taught me that one. Set an alarm at that region and wait for price to come back to that region. Once that alarm gets hit, then you start looking for your entry around that region to go in. But don't look at it like, oh, price is running away. I need to get in now. I need to make that money now. Okay, I'm gonna jump in. Then you end up jumping in at this point, and then price comes back here. You're gonna lose money. So wait for the price to break away. You have to have patience. Wait for it to come back down. Once it's come back down, then get it. Just like here, if you were right here, for example, and you saw gold movie and like, okay, wait, I'm not sure yet if it's going to leave the 200 moving average. When price leaves the 200 moving average, like, oh, wow, price is going. Okay, I want to get it at this point. Okay, wait, I'll wait for it to pull back. Price got here. I'm like, okay, I'm going to wait for it to pull back a little bit more. You wait right here and like, oh, you know what? This is not pulling back. Let me get an entry right here. Then look at what happened. Kicks you out of the trade, take your money, and then most likely going to go back up. You understand? So you understand the drift. Price breaks away, chill, don't do anything, wait for it, keep waiting. This point, when price is breaking away from the point, always keep your eyes to just the closest support or resistance, which is around the left. Don't go all the way far. Don't go too far. Just keep it around here, and then make your decisions based on what you're seeing around here. From what I'm seeing right here, anyway, if price was live and I haven't got this entry hit, what I'll be looking for is price to get to this region. If price doesn't get to this region, then I'll wait. If price moves away from this region, then I'll get my next one right here. So I'm literally thinking ahead of price. So if I don't get in here, I'll get in here. That's the way to do it. Don't rush and chase it. Don't chase it and say, you know what, I'm gonna get it right here. Let it come to you, then go in. Okay. So far, is there any questions? Does anyone have any questions in regards to that? In regards to gold and what's about to happen? If I've confused you in any way, please say now, because what could happen is on that specific date and you're asking me what's going on, I might not have time. I'm really focusing on my trade, so
Sorry.
yeah.
On that daily chart on gold,
Yes.
check. I think the pullback has been completed on Friday. To check, just let me check again to see. I think the pullback has been completed on Friday.
Yeah, that's basically what I'm trying to explain. In which case, I believe similar to, but what I can expect is price to consolidate, because what we're looking at right here is price did that pullback, right? See that pullback that came back on Friday, try to raid everybody that went in on Thursday, left the people that's there on Wednesday. What it could do now is try to kick out some of the people on Wednesday, then price consolidate between this green region. Now, the main reason we can't be totally sure is this, right? If you look at the seasonality chart, the seasonality chart shows like on the first, right? On the first, we're meant to see a pullback from the first or second, actually, or third. So that's the thing. On the 40 years show the first, on the 15 years shows the third, on the what's it called? On the 5 years show the second. So we don't know which of the dates that pullback might happen. It might be the pullback that we're looking at right here, might be this pullback that's already happened. So he did it before the time and then try to just run back up. Now, I personally don't want to risk it, because if we risk and say, okay, you know what, that pullback is completed and that pullback isn't completed, you end up being in a position in which you're holding an asset and the what's it called? The pips that is against you is heavy. I presume a lot of people have small accounts, so most people can't even hold more than 50 to 100 pips maximum pullback against them before their accounts start blinking. And now, that would be something that would cause you panic or emotional discomfort and can make you make uninformed decisions. So what I would recommend is this, right? That pullback might as well be completed, but in order for us to confirm that pullback is completed, what we have to do is we just have to wait. Now, we want to wait for a few things, in which is we want to wait to Tuesday to see if if the COT report is showing us price is going long, right? If that's showing us the price is going long, it gives us more comfort, or like a confirmation that, okay, you know what, that pullback is actually completed. We can look to the upside. But what we also would see here is this, right? There wouldn't be any specific date for us to go in, because according to the seasonality, the only clear shot we have is on the 5th, which is on Thursday, right? But that same Thursday doesn't give us a clear shot on the probability. Friday gives us a confusion, it's 50-50, but I would rather stand to go in on a Friday that's 50-50 than to go in on a Thursday that's 57% against me, So what I would say is, if you can, you wait till Thursday evening and see what price does. If price is still consolidating at Thursday evening, going on Friday, but if price seems to have broken away from this region on Thursday evening, you want price to, by Friday, price should ideally pull back to somewhere around here to get in. So if you've literally missed the initial entry somewhere down here and price seems to go away, you have to forfeit this amount of pips, 355 pips, that you're not going to get in on that point. But you'll be looking towards getting in on the extra, maybe the extra 700 pips to come, or the extra 800 pips to come. That's still a lot of pips to get. I hope you understand what I'm saying.
Yes, I do. Thank you.
Yeah. Okay, cool. Someone said I should look at a screenshot. I do understand what you're saying with your screenshots. I do understand that. One thing I have to tell you though is to be careful about tools with like the fib. The fib does give you an idea, but it doesn't really help. Some people say they trade it and they trade it successfully. Everybody have their own way of trading it. Well, I personally stay away from tools like the fib, because it does shows that prices hit the 0.33821 point, which is what's that? Normally they have like 51.6 points. This is different.
Yeah, sorry. Can you hear me, Dan?
Yeah, I can hear you.
Okay, so I use the Fibonacci tool a lot, and it's worked for me. I've been using the Fibonacci for a long time, and from what I can see on this screenshot I just sent to you, the COT reports that you just mentioned is just clearly means that, because this is the weekly time frame, so it clearly means that price isn't ready to go up yet, because we are currently seeing the rejection at the 382 level of the Fibonacci, and that is the first level that price comes to test after a solid bearish impulse to the downside. So that impulse, 3 red candles that we can see, is a bearish impulse to the downside. Yeah. Yes, and these green candles that are going up is a retracement. So we are still going to see some bearish move to the downside up to the take profit sell position. That is where price will come to before we can now see a reversal to
Okay.
keep up.
So
And
you're
All right. Can I say something?
We
yes,
have 1 minute left, please. Yeah, Karen, please.
All right. I'll make it snappy, please. You see, this your fib is on a weekly time frame.
yes,
Am I
it's on a
correct?
weekly time. Yes.
Now, right now, what I see price doing right now is going to, you see, using the seasonality, just the way them has actually analyzed, what I
Yes.
see is this price is actually going to come down a little bit and it will not get to your sell take profit before
That is
shooting
very
up.
possible. That is very possible because
That-
there's a red candle. There's a red
Okay.
candle. There's a red candle before that bullish engulfing candle, just beside the right shoulder of this head and shoulders that you can see. There's a red candle. Please, Dan, I don't know if you can move your mouse a bit. There's a red. No.
Okay.
To the left. The one that, yes, that red candle. That's a structure. That's a structure there, and that is where price would come to before we see a reversal.
Price come to and from there shoot up. Exactly.
Yes, shoot up. Yes,
Exactly.
and since it's a weekly time frame, that is the place we should be looking to enter, or like Dan would say on Friday. So we're going to expect like a bearish move, and then when price gets to that red candle where Dan is right now, that's where we're going to see that reversal.
Okay.
All right.
Thank you guys for your input. Whichever way it goes, we're gonna see the result by Friday. So I wish everybody the best, and just be careful when you're trading this asset. Okay, it's not fully clear. So, anyways, guys, this is what we have time for this week, and I'll catch you guys in the chat room. We can talk more there. Okay, take care of yourself, guys. God bless you all.
Thank you.
All right. Thank you. Bye-bye.